Hello everyone, a very good morning, good afternoon and good evening to all of you. How are you doing guys? I hope you are having a fabulous day, maybe a very profitable day, and even if not so, we can always make money as long as the session is on, the trading is on. So let us get started as we are inching closer to the start of the US trading session. European trading session is already underway. So using the price action which has unfolded in the European trading session, we can draw some useful inference, and with that we can figure out the opportunities while looking at the strength of the momentum as well as the relative strength of the momentum. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. This is the AUD USD chart. But first, let's see the most liquid, most commonly traded currency instrument, that is Euro USD. This is the Euro USD, and the Euro seems to have jumped quite a lot. Actually, if we look at this price action, in last half an hour or thereabout, it has declined almost 70 pips from the higher levels. So that's interesting development. And even I haven't really seen any fundamental reasons. Maybe I might be aware of the any economic release which might have come through, as I was not paying attention to the economic releases. But what the technicals are telling us is that Europe is clearly on the back foot, and this particular decline is not being seconded in any other major currencies. AUD is not declining that much, so that is something which is going to put the Euro USD in the bearish bracket. In yesterday's session, the Euro was one of the most bullish instrument, and even I had looked at the possibility of it inching higher above 1.09, and it not only surpassed 1.09, it went on to touch 1.1. So that's a level which had not really been touched for many months, and now finally we are seeing Euro somewhere close to this 1.1 range. And even though the current decline is again pushing it lower below 1.1, but for next couple of days we are likely to see Euro hovering closer to this range. It is not likely to turn the trend in a negative anytime soon unless there is any significant reasons to this session as well as for next couple of session. I think from the medium term perspective, it will be a better idea to keep looking for a buy on dip strategy. But for intraday trades, the things are looking bearish, and I would not really recommend any sort of buying, at least for not the next couple of hours, till the things stabilize. And maybe after things stabilize, we can indeed think about the possibility of going long from the medium term perspective also. But purely from the intraday perspective, the things are not exactly bullish, and we will do well to keep looking for short selling opportunities. And even after this sharp move on the lower side, I think moving forward also we have to keep looking for the opportunities to go short, at least in the near future, while looking at the 1.1 range as the immediate resistance. So unless and until there is any turnaround and a further jump above 1.10 for next couple of hours, the things are likely to remain on the bearish side for the euro, and it is evidently much more bearish compared to the other major currencies. As we saw in the case of AUD, it has not really declined much below this immediate swing low, but for euro, the decline has been quite sharp and swift. Let's see its other European peer, the GBP. No, nothing is that dramatic for GBP. GBP has also traded in the expanded range. Actually, in today's session, the range is almost 1 percentage point for the GBP, but of late it is finding some support, and for the last 2 hours it has been able to hold the ground closer to 1.23 range, and that puts it in a better position compared to the euro, which is making these newer lows right now. So for any short sell trade, the euro is going to be an obvious choice unless we see any other major currency trading on a equally solid bearish footing. NZD is not looking that bearish either. If we look at its charting pattern, it is simply consolidating with trying to turn the corner from bearish to bullish. So the consolidation phase is ongoing with the earlier bias being bearish, and now it is trying to make this higher swing high and hold above this immediate swing high. So that's an interesting development. But there is a not much of a momentum on the upside either. It is lacking in momentum. It is simply trading in a range. So you have to keep looking for the opportunity to buy closer to the low and sell closer to the high. There is no directional basis, directional momentum in the NZD. Now let's consider USD CAD. The CAD is also trading on the bearish ground. It had jumped on the higher side, USD CAD went on to make these newer swing high, and it seems to be in line with the Euro USD, which had also made the new swing low around the same time. So the price formation, price trajectory is almost similar for these both the major currencies, the CAD and the Euro against the dollar. USD CHF is also on the similar price trajectory, but only thing is that it is more of a consolidation phase with this bias on the bullish side. It is not evidently that strongly bearish against the dollar. The CHF is bearish, but it is not strongly bearish as is the case with Euro or for that matter even CAD. And what's the story for JPY? JPY is actually the bullish instrument in today's session. It has been consolidating closer to this 129 range, and now it has approached 128 range. So this is the interesting phenomena. Whereas most other major currencies are struggling against the dollar, the JPY is not only holding its ground, it is also evidently on a appreciation spree with this increase in the JPY's value, getting the USD JPY lower towards 128. So we have this opposite move in JPY in contrast to the Euro. The Euro is depreciating, whereas JPY is appreciating against the dollar. So we will have to look at this spectrum and see what are the currencies in which we can look for the trading opportunities and on which side it is likely to be a profitable bait to go for the fresh trades. Now, if we have to do the comparison, we will of course have to do the comparison using the timeline of the formation of swing high and swing low. So for this JPY, the new low came in at 1420 GMT. Now let's compare it with the price trajectory of USD CHF and USD CAD. There has been no swing low for the USD CHF, not immediately. Its swing low came in quite early in Asian trading session. After that, it has been actually making higher highs and higher lows. So that's an interesting development. Similar price formation is there for the USD CAD also. The swing low for the USD CAD came in couple of hours back, so the USD CAD is not as bullish as is the case with the USD CHF. USD CHF is much more bullish in its price formation. The USD CAD is going to fall somewhere in the middle between these USD JPY and the USD CHF with the bias on the upper side. So with this formation of higher highs and higher lows, if we see the USD CAD not really declining much from the current levels and holding the ground closer to these high levels for next couple of hours, we can indeed think about going for a new long trade given its immediate momentum on the upper side. So that possibility is there. And if we now have to compare it with the USD CAD, USD CHF, the USD CHF is consolidating with price formation which is not exactly unidirectional. It is not showing strong signs of further rise. It is playing within the range, and I think we should also adopt a similar approach. We should wait for the USD CHF to again correct from the current levels, and if it seems to be holding the ground closer to 0.9080, that will be a better way to target the levels for new trades. So we have these instruments which are trading in varying directions. There is no uniformity in today's moves in most major currencies. The NZD is trading with a bearish bias. It is simply consolidating. It is not that strongly bearish either. And if we have to keep looking for the trades, we will also have to use this whole range. The swing high coming into play around 0.6535 and the swing low coming into play around 0.6505. So that is the range of around 30 pips. There is not much of a move momentum in the NZD. For GBP, the things are bearish, and as it seems to be holding closer to this immediate swing low, prior swing low, I would keep looking for the short selling opportunities with the expectation of the GBP declining further toward this 1.226 in coming hours. If it doesn't really rise much from the current levels, there is this opportunity emerging which we can look for the short selling trades with expecting the GBP to continue to decline. But then there is this euro which is much more bearish. So if you feel that the opportunity is arising in GBP for a new short sale trade, it will be a better idea to use the same technicals but go for a trade in euro USD, as euro is much more bearish compared to the GBP. So the price formation is likely to be much more favorable for short selling trades in Europe. And AUD is having a similar price formation as its Asia Pacific peer. The European peers are actually having bearish tendency, whereas for the AUD things are looking much brighter compared to the European peers. At least it is not exactly brighter from the bullish perspective. It is more brighter from the bearish perspective, but here it is simply consolidating. There is lack of momentum on either side, as it is utilizing all of these range with moves unfolding in the price range of around 25 pips, and as there is no clear cut bias on either side, I would simply try to utilize the existing range and go for a short sell trade closer to the low of the range and go for a long trade closer to the high of the range. So we have this correlational analysis in place with the results pointing to the Euro USD's apparent weakness, which is going to be ideal instrument to go for short sell trades. Whereas if you are expecting the dollar to lose ground, in that sense the JPY is the best instrument to trade against the US dollar, with its appreciation surpassing almost all the major currencies and it pushing the USD JPY pretty close to 128, with the possibility of a fresh break below 128 can't be ruled out. Now let's turn our gaze to the equity segment. For equities, the things are looking mixed with this late surge of around 200 points. Quite an interesting move from these lower levels. So we have this bit of divergence in today's sessions between the equities and major currencies against the dollar. Though the dollar is not looking that bearish in today's session, we are still seeing the equities holding on to the yesterday's highs, the high levels, and trying to appreciate again. Because for last many sessions we are seeing this strange correlation where the equities have been inversely correlated to the US dollar. Wherever the US dollar declines, we see the equities gaining ground. But in today's session, even though the dollar is appreciating against some of the major currencies, the equities are not losing ground. Rather than that, as I said, the Dow Jones Industrial Average is holding closer to this yesterday's high. It is simply going sideways, and if it holds this level around 34,000, I think after the start of the US trading session, we can indeed go for a new long trade with the expectation of the Dow Jones Industrial Average rising towards the 34,300. Now, if we have to keep looking for the buy on dips trade, then the next question, of course, arises, which is simply which is the best instrument to go for a long trade, go for a buy on dips trade, and for that we have to look at the timeline of these high and the low formation with the S&P 500 making the immediate swing low at 1430 GMT, and after that turning the corner and going on to make this fresh swing high at 1510 GMT. Now if we have to compare it with the price formation of Dow Jones Industrial Average, the high was made at 1530 GMT, whereas for the S&P 500 the high happened earlier. So we have the clear advantage evident in the S&P 500, but compared to both these equity indices, we are seeing the formation of swing highs is unfolding much earlier for the Nasdaq with greater momentum on the upside with its gains of around 1 percentage point from the immediate low to the immediate high, which is also much more in magnitude compared to the gains which we are seeing for the S&P 500 as well as the Dow Jones Industrial Average. So taken together, all these factors make the Nasdaq as the most bullish equity instrument in today's session of amongst the all three major equity indices which we have seen for the US, and Nasdaq is leading the charge on the upside. Let's consider its hourly formation. If you look at its move, yesterday it rose substantially after the Powell speech, and since then it has consolidated in this very narrow range closer to these higher levels, and now again it is inching on the higher side. So my analysis is telling me that this move is likely to last unless there is any significant move on the lower side. We will do well to keep looking for the buy opportunities, buy trades in next couple of hours in the Nasdaq. Let's see what's the story for European equities. The European equities are also trading on the stronger footing with these GBP, the FTSE 100 going on to make these fresh swing high. And before we wrap up the session, let's also consider the DAX. DAX was consolidating with slightly bearish bias for last couple of days, but then the things turned in yesterday's session, and now here we have the DAX inching sharply higher after the correction. But given its correction, the depth of the correction, I would still prefer to go with the flow of the Nasdaq, which is one of the strongest instruments to buy at the moment in the equity segment. So watch out for the all major equity indices and particularly the Nasdaq, and I think the opportunity is likely to arise for us to take advantage of this momentum and make some money buying the equity indices. So that's all from my side for today's session. If you have any query or any idea to share, do write to me the feedback, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading the financial instrument, and also whenever we are utilizing this price formation, the correlational analysis, we always have to keep in mind that the things are not always going to go in our favor. So the possibility of loss has to be kept in mind and trades taken accordingly to factor in these uncertainties. Now I am signing off for the day, but I will be back soon shortly with this pattern recognition, in which we will be talking about the price formation of short line candles. So do join back for that session of JForex indicators explained. See you soon. Have a fabulous day ahead. Goodbye.